Good afternoon, everyone. Thank you for the opportunity for us to present to you. I'm the Managing Director of Auric Mining. We are conducting an initial public offering, and this is our presentation. I'd ask you all to read the disclaimer and compliance statement in your own time when available. Here's the executive summary on Auric. Auric started in August 2019. We're a company focused in West Australia. We're a gold-based explorer and developer. We own two assets. One is the Munda Gold Project, and the other is the Jeffreys Fine Gold Project in West Australia. We also own two exploration licenses at Spargoville, also in the same area. We have a strong asset base. We have around 220,000 ounces, JORC compliant resource. We're a well-credentialed team. We've got good experience in running public companies, and we are developing these gold assets in the area outlined. So as I said, we've got a strong asset base of around 220,000 ounces. We started in September 2019 at nil. September 2020, we're at 108. October 2020, 222,000. You can see that we've been diligent in our work. We've got a clear pathway to 500,000 ounces, and ultimately our goal is to get to 750,000 ounces. We have immediate drilling program planned on granted mining leases. It's important to understand that the mining leases are already granted through the native title process, and there is no impediment for us to commence work other than the usual statutory requirements for flora and fauna and those sorts of things. Our Munda Gold Project adjoins the Mincor Widgie-Maltha gold tenements. Mincor, who we acquired the Jeffreys Fine Project from, are our 7th largest shareholder. We expect them to remain on our register. We do not see them exiting in the short to medium term. As I said, the board of 4 people has a good track record in both discovery, management, and mining success. It is our aim to list on the ASX in the week commencing the 11th of January 2021. This slide is a presentation of what we said we would do in September and what we've achieved. In September, we wanted to raise $2.3 million. We actually raised 2.7. We had bids of up to $3 million. We scaled it back to 2.7 to make sure that there's enough free float for the public at the IPO. We had a resource of around 108,000 ounces. We said we were going to do further work and upgrade our resource, which we've now achieved, and our resource is now 221,600 ounces. We said that we'd do an IPO raise within 6 months of the 23rd of September. We lodged our prospectus on the 18th of November, as I said, with the target listing date of mid-January 2021. Our projects had a substantial and onerous Morgan Stanley gold royalties. These have been cancelled. These have been cancelled for the price of $300,000. We believe that they have created enormous wealth to Auric and Auric shareholders in excess of $6 million by the elimination of these Morgan Stanley royalties. I'll now pass over to John Utley. John is our technical director, and John will take you through 8 or 10 slides in relation to our mining projects. Over to you, John.
Yeah, thanks, Mark. So you can see on that slide the tenements outlined in red are the projects. The Spargoville Gold Project in the north there, 35 kilometres southwest of Kambalda. Kalgoorlie is just off the top of your screen. The Munda Gold Project, 5 kilometres to the west of Widgie-Maltha, and the Jeffreys Fine Gold Project about 45 kilometres northeast of Norseman. It's the Widgie-Maltha area is probably better known for nickel mining. There's a number of nickel projects, including the Mincor's Cassini project, but as part of a broader area, which is probably the most well-known gold areas in Australia, the Kalgoorlie through to Norseman area. You can see St Ives Gold Camp up to the northeast of Munda there. Over 12 million ounces have been produced there. There's new projects being developed all the time in the general area, but I've highlighted a few. I highlighted Beta Hunt, which is owned by Karora Resources. They cart ore from there down to Higginsville. But the reason I highlighted that, it was a nickel mine, and it was realised only a few years ago that they actually had a large gold resource there, and now it's a gold mine. The Karora people are also carting ore from the Barloo pit, which is in the Polar Bear project, a pit they started earlier this year, I think. And I've also highlighted there the Widgie Milford Gold project, which Mincor own. It's adjacent to our Munda Gold project. They mined there in 2018 and 19, and it just sort of highlights some of the prospectivity in the area. Recent exploration success in the area by Anglo-Australian, just to the east of our Spargoville project on the other side of the highway there. And Maximus Resources, recent hits just adjacent to the Wattle Dam mine. If we can flick on to the next one, Mark. I'll talk about the Munda project first. This is the one we're most excited about. We acquired this 100% of the project in September for $1.2 million cash, plus 2 milestone payments totaling $650,000 if we achieved a certain resource ounces, and we've certainly achieved those, so we'll be making that payment next year. Some simple, there's a small historic pit there that was mined by Resolute from 1999, 2000. That only goes down to about 20 metres, and it was mined when gold price was around $400 an ounce Australian. The little bit of geology there. The Munda resource is hosted in basalts and ultramafics at the intersection with a cross-cutting structure. That's all represented in that bottom left slide by the dashed line, the mineralised structure. And you can see the concentration of drill holes. Those are drill hole traces in plan view, concentrated around the intersection of that structure where it goes from the green basalts into the purple ultramafics. We think there's a potential to significantly increase the resources from where we are at the moment, but when we acquired the project, or when we were looking at the project back in September, we realised quite quickly that there was a number of drill holes that weren't included in the current resources, which the current resources at that stage were dated back to 2006. Some of those holes had been drilled since 2006, and a large number had actually been missed during the 2006 resource estimate. 37 holes, in fact. So the holes that are, some of the new holes that are included in the current resource, just released resource, are represented in that table. You can see at the bottom left there, some fantastic intercepts, 46 metres at 8.4 grams, or 8 metres at 16 grams, all headline sort of numbers. They were incorporated in the new resource, which we used a different resource estimation approach and different cutoff grade. The previous resource estimate was at 1 gram cutoff. We think that's unrealistic, and a 1.5 gram cutoff is more appropriate to the open pit that we envisage. So as I said, at a 0.5 gram cutoff, that resource has gone from 46,300 to 174,000 ounces. So there's also potential, as I've mentioned, to increase the resource incrementally through infilling some of the resource drilling where it's quite sparse, and you see some of those little ellipses around the bottom left, around the mineralized structure, and on the right there in the middle, the one at the bottom is bottom right is a area where there's mineralization, existing drill holes. It's quite open, and in particular I'll highlight the area to the northeast there, the northeastern ellipse there, where the mineralized structure re-emerges from the ultramafics, and you effectively have a mirror image-like geological setting, at least, to the Munda deposit. Very keen to get holes into there and potentially stepwise increase the resources in this area. So we've allocated 1.1 million from the IPO proceeds to the different drilling. The Jeffreys Find project. So the two photos on the right just show you the simple flat terrain and a trench, one of a number of trenches where the ore body is exposed at surface. It holds a current JORC compliant resource estimate of 1.22 million tonnes at 1.22 grams per tonne, 48,000 ounces. The Neo prospect, about 500, 600 metres to the northwest, is not included in the current resource, but there are 2 section lines there where drilling is open at the end of the lines, 10 metres at 2.1 grams in one of the holes and 5 metres at 2.4 grams in another hole. So there's the potential to define a small resource in that area, and some simple infill drilling at the Jeffreys Find deposit itself may also increase the resource. I didn't mention we actually purchased that for $675,000 cash and $3.7 million shares at a price of 15 cents per share, together with 1.8 million options from Mincor Resources. And as a result of that, Mincor is our 7th largest shareholder. And the next slide shows some of the geology, or represents the geology at Jeffreys Find. You can see it's a very simple ore body. It's hosted in a banded iron formation, and the red filled rectangles there represent mineralisation above 0.5 gram. You can see it's thickest near surface, very simple geometry, tabular, dipping at about 35 degrees. All makes it easy in terms of mining, open pit mining. It's simple metallurgy, which works out well for conventional CIL. Also opens up the potential to heap leach. We think that there's probably the best potential for this deposit is for toll treatment, simply because of that easy mining side of it. There's distinct magnetism associated with the banded iron formation, which the bottom slide shows quite well, or very well. It's the large red blob there is coincident with the Jeffreys Find deposit. The little black dots you can see are drill holes, and then to the top of the slide you can see the Neo prospect there highlighted over, coincident with one of the next red magnetic high, and the small number of drill holes in that one. Now to tell you a bit about our Spargoville exploration licenses. As I said, 35 kilometres southwest of Kambalda. We acquired these through the issue of 600,000 ordinary shares at 25 cents, the same price as the IPO offer, and 300,000 options. We have a milestone hurdle of $150,000 worth of shares if and when we pass 15,000 ounces. It's a very prospective position along strike from the Wattle Dam mine, which is only 1.5 kilometres to the southeast of that southern license. And as I mentioned, Maximus have been getting some quite exciting results from just next to the Wattle Dam mine, which produced about 260,000 ounces between 2006 and 2012. Soil auger sampling, really effective in this part of the world and really effective in these leases. You can see the bright coloured images in there, soil auger anomalism, and in particular it's highlighted an area called the Fugitive Prospect, which has got some drilling, quite sparse drilling in it, but nevertheless that drilling's returned results such as 14 metres at 2.5 grams. One of the first things we want to do in these tenements is do some more air core drilling and RC drilling within that Fugitive Prospect. There are also other anomalies defined by previous explorers that justify more or some air core drilling to test them. If we go to the next slide, this just highlights our strategy. The Munda Gold Project, certainly want to expand our current resources, potentially find an analogue in that tenement. The current resources are inferred resources, so we have to do some drilling to recategorise those to indicated. At Jeffreys Find, expand the resources, test that Neo prospect, do more work toward toll treatment there. We think we could be toll treating that as within the year 2022. Miscellaneous license application for a 20 kilometre haul road out to the main road would be part of that. Spargoville, I think, just explained that, testing that Fugitive Prospect, other air core drilling. And in terms of our approach to the general area, I think I've probably highlighted that we're really quite keen on a lot of the nickel ground in particular, which has had very little to no focus on gold exploration in the past. We're talking to a number of asset holders in the area, but in particular to those that are nickel-focused explorers and developers and miners. The ASX listing, well, we're well into that process, and I'll hand you back to Mark at that stage.
Thanks, John. So on the screen in front of you is our 6.5 million capital raising and what we intend to do with the money. We do have the application to extend that up to $8 million. You can see that we're going to be quite diligent in where we spend the money. We're trying to ensure that we spend 70% of our funds in the ground or in mining related activities. We've allocated $1 million for opportunities, looking at other M&A type transactions, either under a joint venture purchase or some similar method. We're going to keep our administration and our operating costs extremely low. As I said, these are 2-year budgets, so we intend to be very diligent in our cash spend. I'd like to introduce Steve Morris, our non-executive chairman. Steve is going to talk about his experience in recent public companies, and I'll hand you over to Steve.
Thanks very much, Mark, and thanks for having me on the call. Yeah, I'm pleased to be involved with Auric, and I just wanted to chat briefly about my experience with De Grey Mining. I was fortunate enough to be on the board of De Grey from 2014 through until the middle part of 2019 last year. And during that time, De Grey grew from what was a very, very small company into now what is a large gold explorer. But it wasn't always like that. Very early on, we had to be very, very careful with every dollar that we had in De Grey, and we plan on running the same disciplines as we had in De Grey here at Auric. So we will be putting, at De Grey, we put as much money as we could into the ground. People told us that there was no gold in the Pilbara, or not very much gold in the Pilbara. Well, it turns out there's a lot of gold in the Pilbara. And we happen to be on top of that ground. We already know that there's a lot of gold in the Kalgoorlie area, but Auric is a small company. We'll be following the same disciplines that we did in the De Grey experience. If we can get a fraction of the success that De Grey had, we'll be very, very happy at all. So what we'll be doing is down the same path. We'll have a responsible use of capital. As Mark said, we won't be wasting any dollars that we don't have. That'll be focused on growing the resource. It's all about growing the ounces, by putting the money into the ground, growing the resource either through exploration or the acquisition of more ground, a good ground around us. At De Grey, we made a number of acquisitions. The India acquisition was extremely important in building that land bank there, and other acquisitions around the area too have all contributed towards that. The difference between this one and De Grey is that this one has early production benefits as well. And whilst this is not a company that is seeking to rest its laurels on early production, that's very important as far as cash flow goes in the near term. So in short, the reason that I am excited to be involved with Auric is because it has a good resource base. It already has ounces in the ground. The people are good, the area is good. And I think that if we can show the same disciplines as we did previously, that we can run a tight and really efficient business here. We're about creating shareholder wealth for ourselves as well as all of our shareholders, and that's really important. We'll do that by doing a good, responsible, careful job, putting money where it needs to be.
Thank you, Steve. So here's our board. As I said, Steve is our non-executive chairman. Steve's got 30 years experience in the capital markets, principally in Melbourne. Stephen Struble is another director and company secretary. Steve is a company secretary of a couple of ASX listed companies, and he has also worked in the capital markets in Melbourne. I'm a chartered accountant. I've worked in the chartered accountancy industry for the last 40 years. I've worked in London, Sydney and Perth, principally in IPOs, capital raisings and audit. I have been a director of some mining companies throughout my career, and I'm now the managing director of Auric. It's my full-time employment. John is our technical director. John's operated all around the world. John has been involved in some substantial gold discoveries. The last 10 years, John was the chief geologist at Atlantic Gold in Nova Scotia, which is now one of the larger mines in Canada. Here is our IPO capital structure table. We'll have 86.6 million shares on issue, gives us a market capital of $21.7 million. We'll have around $6.1 million cash after IPO costs. So that gives us an enterprise value of around $16 million. That equates to around $68 per ounce for gold in the ground. If you use Liam Twigger and PCF Capital's standard valuation, they say it should be closer to $125 in the ground. So you can see that we believe that we are a substantial discount to the rule of thumb methodology, and we hope to achieve that in our capital structure. So here is Auric. So what are we and why are we important? So we know it's a competitive market. We understand that every dollar in Australia is difficult to come by. We're focused in one area. We're focused in one commodity. We're in the blue blood area of gold mining in West Australia. We've built great resource already in our 18 months. Our cost of acquisition has been less than $3 million. Our implied value is closer to $25 million. All our projects are really well located, great infrastructure, be that roads, power, water, access to towns, access to staff. We will not be going into the Pilbara, we won't be going into the Kimberley, we won't be going out to the West Musgrave, we'll be staying in this area. We're a good team, we've got great experience, we cover all the necessary areas to operate as a small, exciting, developing gold producer. We're ambitious, we work hard, we'll achieve our targets and we'll achieve our milestones. We are aspirational. As a board, we've set ourselves some pretty high targets and goals, which we intend to achieve. We'd like to thank you for the opportunity to present to you, and thank you for your interest.